All right. Good morning, everybody. And thank you so much, Dave, for inviting me to the Festival of Traders. This is always a great event where you're going to find a lot of free information that is so valuable. Literally, you're not going to find it anywhere else. So today I will be talking about supercharging your trading in just 1 hour a day. And this is something that I have been specializing in for the last 20 years and how to trade less and actually live more, grow richer, and obviously make more money. For those of you that do not know me, my name is Anka Metcalf. I'm the CEO and founder of TradeOutLoud.com. I have been a professional independent trader for more than 20 years. Prior to becoming a professional independent trader, I come with 10 plus years in investment banking. And I do run Trade Out Loud, which is a trading education firm that is specialized in educating individuals how to day trade, swing trade, and invest in any market. I do run two very successful services for stocks and ETFs since 2010. The Stock Swing Trader is the oldest program that we have. Trade Out Loud actually was born in 2010, so we have been running very strong for the last 14 years. I also run a trading room for futures day traders that is focused on trading the power hours since 2017. We do offer trading education for swing trading, day trading, and investing, and I do specialize in high velocity trades, and I have a couple of examples for you guys today to show you exactly how I pinpoint my entries, my stops, my targets into this high velocity zone. I do pay very close attention to price support resistance. However, I pay attention to the 8 layers of price support resistance. I specialize in specific trigger times throughout the day because I have been a day trader for more than 20 years now. I've learned through the years that there are certain setups that tend to trigger at certain times. And these setups are lining up on specific time frames that I'm going to be sharing with you guys today. I also love to look at the specific price zones, areas in which the indices, because I do trade every single day, the indices. I like to look at the areas where they trade because there are 4 specific price zones on technical charts where institutions have the tendency to leg in and leg out of. And chart synchronicity and divergency is very important because, for example, on a day like today or even yesterday, even if you see range-bound action that is going on onto the daily charts, when you're looking at intraday timeframes, there's always something that is going to speak to you in the sense of synchronicity or divergency. So today, again, was a very big example on divergency where we started the day with relative strength in NASDAQ NES, and we had before the market opened, and we had weakness coming into NASDAQ right off the open in the calibration phase, but definitely the price action just firmed up just 15 minutes into the process, and we're going to be talking about those 15 minutes and what they mean for the market. So if you guys want to get started with trading and really you don't know where to start, I've been there, I've done that. So I just want to go back a little bit here because my charts went funny on me. Okay, so if you want to learn more information about Trade Out Loud, you can visit us on social media. I do post a lot of trade ideas on X, and we do have a nice following on X. And if you want like up to date what I'm watching, what I'm trading, you can actually visit me there. It is free to read all those comments that I make about the market. And I promise you, I'm not going to have anything annoying on that platform. So today we're going to be talking about the most important times to take trades. And I mean the high-ask trade. And what is the high-ask trade? A high-ask trade is the trade that is lining up, that is trading into a tradable void. So the power of follow through is on its side. So that means that it's going to achieve targets. That means that it is likely to achieve targets. And in fact, in some cases, it's likely to achieve targets faster than even other indices. We're also going to be talking about understanding risk and risk to reward, which is, I call it the holy grail of trading, even though there is no such thing as a holy grail in trading. But I consider risk a holy grail because if you do not risk and position size for your trades, things are going to be all over for you. You have to have a certain size that you're going to take the trades with, and that should never vary. That should be a fixed price. So for example, if you're risking $1,000 per trade, and you're taking 3 trades a day, then you should compute that in your budget, and that will keep your emotions down. Also, we're going to talk about reading the chart and plotting a trade. We're going to talk also about the advantages of trading futures and the power hour. And of course, the most important thing, the time frames that will deliver the best results, and actually that delivered the best results for my style of trading. All right, so with that being said, my goal for you in this presentation is for you to understand the process that I take with each and every single trade. But before we do that, I know there may be some new traders in here that maybe they don't know what the difference is between day trading, swing trading, or even investing is. So day trading is an activity where you initiate trades and you trade during a certain period of time within that day. For example, for me, the day trading and the let's say the focal time for trading is into the first hour of the day. However, I do look at the market between 9 o'clock and about 11:30, and you will understand why in a few moments. So day trading is getting in and getting out of the trade within the same day. Swing trading is holding on to a position from 2 days to a couple of weeks, and investing is definitely holding more than a couple of weeks, holding for months, for years, for decades. For me, day trading is an income style generating. Swing trading and investing is wealth generating, where your money is working for you. Now, don't get me wrong, in day trading, my money is working for me as well, but I have to work for my money because I need to see the setup every single day. And this is, to me, instant gratification. And this is how you build your account. And you would be able to take the money out of the account. You would be able to pay the bills. You would be able to make some extra money. And then you would be able to put it in your swing trading account and into your investing account. So it's a way, a path to building wealth as well. Before we go even further, let's clarify what the R is, the power of the R. And this is the risk level. Now, everybody's asking me that, just wants to get started into trading and saying, hey, is trading risky? Well, I can say that, hey, walking down the street is risky because you can have a crazy car that is going to hit you. If you drink water, that may be risky. What if you choke and die? Trading is risky as well, but you know your limits. And your limit is, and in fact, we're going to talk about the next slide, your limit is your budget for the day and your budget for the trade. Because remember, the secret here is to have consistency, not in wins, in losses. Because you're going to let your winners run. Your winners are definitely going to make way more than your losing trades when you know how to trade. And this way, you have to know, if you have to understand how to manage your risk. And your risk has to be the same on each and every single trade. So how do you determine your risk and your risk tolerance? First of all, looking at your account size. So right now, take a look at your account size, see how much money you have in your account size. And what the norm suggests is when you're day trading to risk 1 or 2% per trade. I trade with 1%. I don't need to grow my account. I also run a trading room. You're going to see my stats in a second by trading with 1%. And it's fine for me. I don't recommend going to 2 or 3% because that is a relatively very high risk for day trading. And especially that in day trading, you're going to take multiple trades in a day. I allow myself to take between 3 and 5 trades in a day. Now, the question is, do I take 3 to 5 trades every single day? No, I don't. And in fact, there are days when I don't take any trades. For example, on Monday, I didn't take any trades. Yesterday, I took a couple of trades. Today, I took a few trades, right? So it's in strict correlation with the market environment. So think about this, your account size and 1%. So let's say you have a $50,000 account size and your 1% is $500. So now that you have this amount set, you have to determine how many shares or contracts, because this applies to stocks as well. It doesn't only apply to futures. It applies to options. It applies to anything. Now you have to figure out how many contracts or shares you're going to trade with. So how many shares and how many contracts can fit in your $500? And what happens if you cannot fit because of the volatility that we're going through right now into the market? You may seem to find out. You may find out very, very often that you may not be able to take the trades with, let's say, a full-size contract, and you may start going towards a micro. Now, I have many traders that come to me and they go like, okay, I'm a new trader. I'm only going to be trading micros. That is so wrong, because you need to trade the amount and you don't trade the preferred size contract. So another very important element is to decide, again, how many trades will you take per day? Because once you understand the amount and once you understand that, yes, if I have a down day, and let's say if I lose on 3 consecutive trades and I allow myself only 3 trades, then my down day would look like a $1,500 down day, right? So it'll be 500 times 3. And from this point on, you would have to understand, and you would have to, kind of like come to the conclusion of how that makes you feel. Are you comfortable with losing $1,500 in a day? Are you comfortable with losing $3,000 in a day in case you double the number of trades that you take? And remember, always trade when the trade is there. Never try to make up trades. Never try to play on FOMO. Okay, so I'm just going to give you a quick example of some trades. This is a trade that we've done a while ago, and this was a short, and my mouse is moving all over. I don't know why, but anyway, so this was a short. This is the entry bar, and this is the stop. I always place the stop above the pivots, and I take the trades based on the technical pattern. And in this case, we see that the price action is running below the 10 exponential moving average. It's actually doing a mini sandwich breakdown. I could have had my stop over here, but due to the volatility, I decided to put my stop at the top of the pivot. I had 2 targets in sight. I had the first target into the bottom of the pivot, and I had the second target right here where this line is that came from a support level from a higher time frame. So I had 2 targets already set up, and the game plan for this trade was well established in advance. And when we had the first sell setup that was happening here, I already made my calculations that if I have an entry at this level, I will be looking for a target in here, and I would be looking for a target in here, and this would be my risk. Every single time when I take a trade, I always analyze the risk-reward ratio, because that is also very important, because in some cases you will see that the reward is actually very tight into the trigger point. And in that case, that would allow at least 1 R. I typically look for at least 1 R into my target 1. And then I look for a second R or 3 Rs or 4 Rs, depending on the case, into the next support level or levels. And in this case, this made a lot of sense because I shorted it here. I placed my stop over here, and I went for a full target over here. So always strive for at least 2-to-1 or 3-1. Anything that is a 1-on-1 is not a great option, because basically you're risking, let's say, $500 to make $500. But in the event that you have 3 consecutive losses, and if you base your trading decisions on a 1-on-1 R, it means that after 3 losses, you take a 4th trade, and let's say that trade works for you, and you accumulate that 1 R, you're going to make back for 1 trade. However, my system allows you to actually make back all of the lost profits that you, all the losses that you made into your past 3 trades by only executing 1 trade. So that's why I am super focused on my trades. I like to look at the risk to reward ratio. I like to look at all these levels that I see on my technical chart that will allow me for a good continuation. If I don't see continuation on the technical pattern like it was on Monday, I do not take the trade. I would rather miss a trade, even if it start working, than having a losing trade. So therefore, I'm very, very calculated when it comes to trading. So this was a trade from yesterday. I'm going to share with you a trade from today. So in yesterday's trading, we took pullback buy off the 10 exponential moving average. We placed the stop below the pivot. Our entry is right here. Actually, our entry was 180, and the stop was way here into 155. And we had a target all the way here. We didn't have extra targets. We only had 1 target for yesterday, and that was for the power hour. So I'm not discussing for the rest of the day, because for the rest of the day, there was another setup that happened in the afternoon towards 1 o'clock and a breakout that happened into 2:30. However, into this trade, you could easily see that we made 2 R's in that particular setup. And I want to show you a live chart right now. And from today, these are trades that we took today. So we had an entry here. You can see that from the open, the price action from 9:30 open, the price action was pretty much haywire. And I'm going to show you, and I am going to show you the reason why it was like this and what the tactic was. So we took the trade a little bit later in the day. So we took it after 10 o'clock. 10 o'clock also marks a really important reversal time for price action. So we took it at 10 o'clock. We placed our stop over here, and we had a target all the way into the 350 and into the 360. And by the way, it was accomplished. And right after that, after the slightest pullback, notice that the chart is on the 5-minute. We actually trade on the 1 minute. So what I do is I don't take myself out of the trade. So we have targets along the way. However, as we're going into target, I'm reading the momentum on charts. And if we have very smooth momentum continuation on the 1 minute or the 2 minute, I am zooming in on a much smaller time frame and trailing on a much smaller time frame so I don't get money back. And this is on choppier days. On trend days, I don't have a problem staying in and trailing on the same time frame that I'm trailing, okay? So for example, if I were to do a reversal trail here, my trail stop would have been right here into the 330 versus my exit area. So if I was doing pivot trailing, I would have to wait for the pullback, and I would have to trail all the way here into the 300. And again, on these range-bound markets, you don't really have a guarantee, and especially that today we have the FOMC meeting minutes coming at 2 o'clock, you don't really have a guarantee that the market is going to have tremendous follow through, right? So you don't have that, real catalyst. The catalyst may come after 2 o'clock. So this is what we did. And right after that, we were in the trading room, and I was getting ready for this presentation right now, and I was signaling another trade. So this is a new entry. It was a 4-bar pullback with a doji signal. So here comes the sell action into the 10 EMA, and here comes the indecision. So it's bullish above, continuation lower below, and this was the new entry. This was the stop, and the targets were all the way into the 420, and I could see it right now that it went into the 418. So if I was still in the, if I would be in this if I would still be in this trade right now, I would wait for this bar to close. So I would have less than 1 minute to this close, and I would put my stop under, or I would go into a smaller time frame like a 2 minute, and I would be out here. Okay, and most probably this is what I would have done, because I didn't want to give back all the profit. So this is a little bit of an example of how I trail into target. So if you want to start trading, but you really don't know where to start, you have to find a person that is in sync with your style, your momentum, and let's say not only the style, but also to be in sync with everything that you want to achieve. So you want to learn from a person that has already been doing what you want to achieve. So in here, I have some examples of some charts of some 5-minute work days. Now, keep in mind, this was a couple of months ago, and I think this was in August. And because in September, we didn't trade CPI and PPI numbers because of the market environment, which was in because we were still sideways, and we're still sideways right now. So we really don't know what we're going to be trading CPI and PPI numbers going into tomorrow and Friday. But this was a perfect example of a setup that we took. And you could see here, so when I am in the trading room, I come on the mic usually around 9:15 or so. And these trades are happening at 8:30. So I usually post the trades 5 minutes before they happen, and with my entries, my stops, my targets, etc. So in this case, you can see here that I was typing to everybody. These are really fast-paced trades where I really don't have time to comment and explain to everybody what I do. So it's kind of like take it or leave it. Okay, it's not for everybody, and it's actually for everybody that wants to learn how it's done, how to play after the news. I never trade before the news. I think that is very, very risky, and that's more of a casino style trading more than gambling, but I trade the reaction to the news. So therefore, the news is down. I'm taking this breakout, and you can see here that this bar literally made my day. And we actually had a really great profit for the day. You can see here that 5,300 G, 5,320 on deck. NASDAQ wanted this, everything 550 is on deck. So you can see here that we were done for the day literally in 5 minutes. I want to show you another trade that we've done. And this is for June, for example, because we did June, July, August, and here we had another breakout. Instant gratification on our targets. Remember, the risk to reward ratio is very, very tight, so it's within the limit that we risk. So it's not risky to say like, oh my gosh, you're trading these crazy bars, this is so risky. No, because if you have a stop and if you have a calculated amount that you're going to allocate for each trade, and you know exactly how many contracts you're going to take the trade with, it's actually super easy. So you can see here that we actually achieved targets, and we were done also in 5 minutes. And so 5 minutes, pretty cool. This is again another time that we traded, posted this in the trading room at 8:20 on August 13th. This was the entry right here. This was the stop underneath the pivot. And by the way, I always put the stops underneath the pivots because that is your natural support zone. And this is our target. And our target was achieved. You can see it right here from the get-go. Wow. I even changed the batteries on this mouse. Okay. So this is target achieved. Instant gratification, as you can see here, 52 points in 1 minute. So this is the 1 minute workday. So this is $1,000 per minute per contract, okay? That's how it looked like. This is how the day looked like on that August 13th. I made over $10,000 on almost $500 on my trades. And yes, we continue to trade after the open. So trading for a living means you don't have a boss. You don't have to commute. I was actually one of the commute victims because I was having a really long drive to work. No clients, you don't need to have any email lists, you don't need literally anything. It's just you and your computer, and I could teach you how to do it, and I could teach you exactly how this is done. So basically, I'm turning my computer into my personal ATM, and this is actually a catchphrase from my mentor. This is what clicked for me when I first started trading retail. When I started trading retail almost 20 years ago. So this is what my mentor said, and this is what, it stuck to me to this very day. You have to turn your computer into your personal ATM. And I haven't looked back since. I just wish I had started earlier. So this is the perfect time to learn how to trade your way to financial freedom, because the day trading aspect of trading gives you that income, generates that income. The market is always a permanent transfer of wealth from the novice trader to the educated trader. So the markets are still going to remain super hot through 2024. This is no doubt. It's an election year. Election is right around the corner. We still have the Ukraine saga that is continuing. We have the Israel-Hamas war that is actually extending right now. We have more FOMC rate cuts. Let's see what they're going to be discussing today at the FOMC meeting minutes, if there are going to be any nuances, new nuances or additions to what they have already discussed last month. I think it was September 18th or something like that when we had the FOMC meeting. Inflation is still super high, massive layoffs continue, and recession. Are we still getting that soft landing? All right, so just want to show you this, my account stat. The image that I took was on September 17th, and this is the accumulated return, $570,000. Now, we doubled, I doubled my account in 8 months. So I have a $500,000 account, and you're going to say, yeah, but you're lucky to have that money. You can trade with a, you can make more money with more money, and I agree. But now, look, you have so many options out there. You could get funded with prop accounts. So there's no excuse, and you're getting such great deals with these prop accounts. You too can trade a $500,000 account. So these results are, you could replicate these results. You could actually, trade the same way I do. So what do you need in order to start trading? Well, you have to have that burning desire. You want to make money. You want to be successful at trading. It's not about money, because every day when I wake up, I don't get in front of the computers and say, oh, today I need to make $1,000. No, today I need to find the best trade setup. I was going to say the best buy setup. We're such in a bullish market because shorting has not been an option. So, but yeah, I need to find the best trade. I need to find the best setup. I need to find the best entry, the best stop, and the best targets. This is what you need to look for in the market. Not, I need to make $1,000 in a day. That is not feasible. You need to have really good, solid education. And not only that, but it needs to be doubled by experience, time spent into the market. So whenever you have free moment, look into the market, analyze the markets. Think about this. If you analyze or start analyzing only one chart a day, by the end of the year, you would have analyzed 360 charts, one chart a day. And that makes a world of a difference, because you would have a portfolio of over 364 stocks or charts that you have analyzed. Discipline. Yes, you need the discipline to follow the plan. Hey, you're looking at a person that did not believe in having a trading plan. And it wasn't great because I was scattered. I was trading gaps. I was trading continuation plays. I was trading right from the beginning. And I should not have done that if I had a plan. If you have a trading plan, that's going to funnel all your attention into one specific setup, into one specific time frame, and it's going to actually make you more money than being scattered all over the place. Patience to wait for the opportunity. People that, and traders in general, that say, oh, I can't wait, I don't have that patience, they don't have actually education. It's not the patience that they lack, it's the education that they lack. Because what you need to look in a trade for, you need to look for the setup. You need to have the patience to look for the pullback and wait for that rotation to happen. And of course, focus, no distractions. When I trade, I don't have my phone on, I don't have any TVs on, I don't have anything on that would distract me. My office doors are closed. I'm in the zone. I'm trading in the zone. So that is my prime time to make money, that hour, that power hour. And of course, you need to have conviction, because if you're starting the day, conviction and attitude are very important into trading. Because if you have conviction, and by the way, conviction comes from education of what you're seeing in the charts and your ability to read charts and read technical analysis, and the attitude says everything about you. Because if you're coming in the market in the morning and say, oh, I don't know if I'm going to make money today, it's not going to work for you. Okay, come into the market every day and say, hey, today I'm going to nail that setup. Today I'm going to be having the patience to wait for the setup to form before I get in. And of course, perseverance. I like to focus on the 4 major indices. These are my bread and butter every single day: the Russell, NASDAQ, the S&P, and Dow. I do trade, but I swing trade the rest. Sometimes I do look for crude oil for a day trade, and it has been very choppy lately, so I literally have ditched it for a few months. I do trade gold. I had a trade in GLD, and I had a trade in gold as well. Very successful trade. The GLD one was spectacular. So I do look at agricultural products, but they have been under the pressure, under a lot of pressure lately. So my focus has been bottom line for indices, for charts. That's all you need, because trading is basically your ability to implement the rules of the game, your ability to project your trading plan into that specific trade and wait for that setup. And if you can't remember the setup, have a printout of a chart that worked for you. Signal your entry, mark your stop, mark your target, and stick it on the wall in front of you. And every single time when you take a trade and say, hey, I'm just going to be looking for buy setups, or I'm going to be looking for rotations, or I'm going to be looking for breakouts, whatever your favorite strategy is at, look at the picture on the wall and see, hey, does that picture look to the current environment that I'm in right now? Does that look like the setup that I have right now in front of you? And if it does, take the trade. Mimic the one that was successful for you. And finding high-X trades is about finding trades that are setting up properly, that are in sync with the momentum of the market, and trades that are not in range bound, because the difficulty that we have been crossing for plus 2 weeks, let's say in the SPYs or in the mini S&P, was that we had a massive range bound action, more than 2 weeks, guys, more than 2 weeks, in which it was very hard to determine targets to the upside. Obviously, shorting was not an option because it was so strong, right? But it was so hard to determine whether, and actually to guess whether today is going to be the day when, let's say, the S&P or SPYs are going to break above. Is today going to be the day? And we were looking for a catalyst, right? We're looking for clues that are going to show us whether the price may have a chance to continue higher or lower, okay? So we're looking for reasons for that continuation. Waiting for a setup, fine precise execution. Your execution has to be flawless. You need to know ahead of time where your entry is, your stop is, your risk, your position size, how many contracts you're going to be getting. Everything is pre-planned. That's why when I trade, I only use limit orders. And then, of course, you need to determine your targets and trail into the targets. That is another thing that is so super important. You need to have a good trailing strategy. And there are very good trading strategies. We actually teach our traders 3 trading strategies, amongst which one is the most easiest, that goes by momentum trailing. And of course, mindset. Like I said, mindset is very important. Now, I'm going to share with you guys the best times for trading. So the best times to trade are from 9:30 a.m. to 11:30. And I'm going to share with you the why in a few moments. My favorite time, though, is from 9:30 to 9:35, because I consider that the power hour. And I'm going to define the power hour for you guys so you know the secrets behind power hour trading. And also, what if I told you that there are 2 power hours in the day? That's right, there are 2 power hours in the day. So the reason why I like it from 9:35 is because typically the price action, I like to watch the price action in the first 5 minutes of the day to see where the high and the low of that first 5-minute bar is. And typically, if it's a really bullish day, whatever tops and takes out that 5-minute high has odds of continuation higher. And this is for specifically for power trend days. Now, why do I like this timing? First of all, it has the most volume in the market. It's high in volatility, and it's reacting off of news, right? Because you typically have news from 8:30. Sometimes you have news at around 9:45 or so. Sometimes you have news at 10 o'clock, right? So these create momentums for the market and good opportunities. And as the momentum fades out, you're going to see that if you don't have any other catalyst for the day, or if the market is not staged into a power trending position, that is pretty much the high into 11 o'clock. And then the market is going to start drifting, and it's just going to wait for the next news release. So what is the power hour? So first of all, in day trading, the term power hour refers to specific periods, periods during the day trade when there is typically a surge in trading activity and volatility. These periods are often characterized by higher trading volume and more significant price movements, which can create opportunities for traders to capitalize on short-term market fluctuations, like that momentum impulse. And there are two main power hours. The power hour, the morning power hour that I trade from 9:30 to 10:30. And this is the period of time where traders react to the overnight news, economic data releases, and other market moving events. And then there's an afternoon power hour, and this happens during the last hour of the day between 3 o'clock and 4:30. Now, this is super powerful. I specifically like this period of time, especially when we have a massive down day, because when you have a massive down day, let's say you have the Dow down, I don't know, 900 points or 1,200 points or something like that. When you have it really down, and when you have the next day, or even if you have overnight data, or you have, let's say, CPI numbers the next day, guess what? The traders that were short would want to cover at the end of the day. And typically they start covering at 3 o'clock or 3:30. It's also called the ramp time. So this is really profitable, because if you haven't caught a trade to the downside, because let's say the power trend was so fast and you couldn't get in, this is your timing for you to get in, because you would actually, as they sell, you're going to buy from them and take the price higher. So worst times to trade: before any economic news release, a couple of hours before FOMC. Obviously now we're almost into the top of the hour, and definitely a couple of hours we're going to have the FOMC media minutes. Option expiration days are very challenging, and option expiration weeks, and the last day of the month. Let me explain the power hour. So typically you get an upload from 9:30 to about 10 o'clock. 10 o'clock reversal time takes the price down. If the pullback is shallow, 10:30 is going to be your prime bet to take another trade into 11 o'clock, and you're done. And once you learn this, and actually you can print this, put it on your wall, and you're going to see it's working every single day. Today we have a little bit of a chop like this in NASDAQ. That's fine. We took it over the base. We put our stop below the base, and we had our trade again. But our trade was actually more into 10 o'clock, because that range was a lot longer. So again, here, any pullback, remember the second trade that we did today that I showed you, 10:30 onwards. All right, so there are many advantages of futures trading. You have a reliable volume, you have access to minis and micros, you don't need to use a scanner, you have access to 24-hour market, so it's fantastic. Plus the account size, you don't need to have $25,000, you can open an account with less than that. I highly recommend, if you don't have at least $25,000, even though you have brokers that are allowing you to open accounts with less than that, trust me, it's not the market to trade with small money. Go the prop route. So I'm going to go through this because my timing is almost up, but I wanted to get to time frames. Not all time frames are equal. And when I trade, I pay attention to the time and the time frame. So that means that when the market opens, I pay attention to price action activity on the 1-minute chart from 9:30 to 10 o'clock. I pay attention to the 2-minute time frame from 9:30 to 10 o'clock as well. So these two are in sync. And then from 10 o'clock, I dish the 1-minute and the 2-minute, and I focus on the 5-minute. However, trailing can come on the 2-minute and 1-minute if we're getting an explosive move. And for this time of the day, for example, for noon, I focus more on the 15-minute charts. And then after 2 o'clock, I focus on the 5-minute chart. So basically, this is my trading plan in one slide. Market timing, 9:30. Market opens at 10 o'clock. We have a reversal. 10:30 we have the triggers. We have the 2-minute time frame, 5-minute, 15-minute. The pattern: buy, sell patterns, breakouts, and breakdowns. Okay. Oops. I don't know. I clicked on something. I hope you guys can still hear me. All right. So if you guys are ready to join my trading room, this is my trading room right here. Every single day, Monday to Friday, from 9 o'clock to 11:30. You have the link right here. Just I'm gonna post it for you guys. I know Dave is gonna post it as well. And all right, here it is. So if you guys have any questions, feel free to ask.